We are just days away from the June 18th Fed rate decision, the new dot plot, and the Jerome Powell press conference. What is it going to mean for the markets? Find out in part 2 of my Fed rate decision video series. Check it out. What's going on, everybody? Jeremy Ritz, Courage Pays Better Than Fear Trading, here with you, part 2 of my Fed rate decision series, getting you prepared for this June 18th meeting. It's creeping up on us. I'll have one more video part of this series. But today I wanted to talk about the recent data that's come out in the economy, specifically CPI and PPI that were freshly released this Wednesday and Thursday, what they mean in terms of potential rate cuts. When are the rate cuts being projected? Is it June 18th? I'm going to get into all of that and more, because as traders and investors, we have to know what is happening with the Fed. So again, June 18th is the date of the meeting. And the way this will play out is at 2 p.m., we're going to get the rate decision in terms of what the Fed has decided to do with the interest rates. And as of right now, market makers are not pricing in a rate cut for the June meeting. You could see that the first cut is really not anticipated until September, though we've seen an increase for a chance of a cut in July off of inflation data, which we'll talk about here in a second. And then we're also going to get at 2 p.m. on the 18th, we're going to get the dot plot, which is going to show the projection of rates for the rest of 2025 into next year. And so that's important because it shows the path of monetary policy. And just going back to December, whenever the number of rate cuts that were projected in 2025 were cut by the Fed, that caused a massive sell-off in the market. So that's why it is so important. And then following that, we get Jerome Powell, the Federal Reserve Chair, who's going to speak at 2:30. I'll be live streaming that. Hopefully you can join me. The link is on my channel. And what we want to pay attention to when Powell is speaking is what his tone is. Is he hawkish, meaning is he bearish on the future of the economy, which is going to put pressure on stocks, or is he dovish? Is he bullish on things? Does he see the economy being in a good state? Does he see the opportunity for rate cuts, but not rate cuts that are needed to save the economy, but almost like a Goldilocks scenario where everything is functioning perfectly? So those are the things we want to watch for on the 18th. And so a lot of things have happened over the last week since I did my last video. And I just want to update you. We did get some important data in relation to the economy. And the first being CPI, the Consumer Price Index. And we actually saw that come in lower. So the inflation rate year over year, the forecast was 2.5%. It actually came in a tick cooler at 2.4%. And then the inflation rate month over month, it was forecasted to come in at 0.2%. It came in at 0.1, so a tick lower. And then when we look at the core inflation rate month over month, it was forecasted at 0.3. It came in at 0.1. Inflation was less than expected, cooler than expected. And when that information was released at 8:30 a.m., you did see an initial spike in the market, but then that sold off over time. Now, whether that was a result of lackluster optimism or enthusiasm about the trade deal with China and the US, we don't know, or maybe it was taking risk off the table for PPI. It just wasn't the massive move that typically you'll sometimes see with positive inflation reports that we've seen in the past. So we got the CPI data. And then Thursday, today, when I'm recording this, we got PPI, the Producer Price Index. And just going through that data with you, PPI month over month was forecasted at 0.2%. It came in at 0.1. Again, a tick lower. Core PPI month over month, it was expected to come in at 0.3. It actually came in at 0.1. So again, lower than what was expected. Stocks are moving higher. The SPX up 18 points at the time that I'm recording this. So the data that has come in from an inflation perspective shows that inflation is continuing to slow down. Now, where the uncertainty exists is whether or not the tariffs that are being implemented are going to cause a spike in inflation, and whether or not that inflation will endure and stick around, or whether or not it will be transitory. So that's the one thing the Fed is uncertain about. But what we've seen as a result of this data, again, we did see a tick up in the probabilities that we could see a rate cut in July. Ultimately, what market makers are seeing is that first rate cut of 2025 coming in September, and then the next one being followed up in December. So the next thing I wanted to share with you and provide an update is about what Fed speakers have been saying, what Jerome Powell has been saying. And here's a rundown of some of the most recent information. We did get the minutes from the Fed meeting from May 28th, and those notes were neutral to hawkish. And again, it just emphasized the Fed being data dependent in terms of making their decision. And that means that until they have data from inflation, the labor market that supports rate cuts, that they're going to hold steady. And they feel that they have the luxury to do that because the rates aren't too restrictive. They're not overly restrictive. And so they're waiting. And what they want to see is if the labor market does weaken, if it loses steam, then they could be in a place where they can cut. And if inflation continues to drop, then they could be in a place where they could cut. And ultimately, if that labor market is failing a bit, or if the economy starts slowing down, that points to weakness. And again, that could be another reason to cut. But ultimately, when we talk about the inflation component, what really is going to be important is the impact of tariffs. We just don't know yet what that's going to be. So that tariff uncertainty is something that continues to come up, not just from Jerome Powell when he talks. He actually spoke on June 4th and mentioned the uncertainty surrounding tariffs, continued to emphasize the importance of being data dependent in their decisions. There's nothing new there. And so that's really going to be the big story in terms of what happens with tariffs and the impact on inflation. But again, just some other notes from Powell speaking on June 4th. He talked about how the labor market is solid and that there's no rush for cuts, and that he believes that longer term expectations for inflation are well anchored, meaning that despite some spikes that could come in inflation due to tariffs, he thinks that that will eventually come to 2% and stay there and will be anchored there. So that's something that is positive in terms of what his longer term expectation is for inflation. However, he did point out the uncertainty related to tariffs and that they have to wait and see what's going to happen with that. And we'd be remiss not to talk about President Trump and what his thoughts are in terms of the Fed and rate cuts and Jerome Powell. And he has posted several times, once this week after CPI came out, that Jerome Powell needs to cut rates now. So Trump wants rates cut right now. And this is a concept that's been talked about quite a bit, is the whole concept of a shadow Fed chair. And you might be asking, well, what in the world is a shadow Fed chair? Basically, keep this in mind. Powell is done with his term in the springtime of 2026. I believe it's May of 2026. And so he will have to be replaced. So there is speculation that Trump could say, all right, hey, this is my guy who will be appointed to take over for Powell whenever he is done with his spot. And what that ultimately would create is a lame duck Fed chair, Jerome Powell, and this other guy waiting in the wings who would take over, then would begin to have influence over the economy and over the markets based on their speech, what they say. And some people have even said that they could have shadow Fed meetings where they're meeting and discussing economic policy and giving insights in terms of what's going to happen when this person would take Powell's place. If Trump does name somebody who will take over for Powell in May of 2026, and one of the names that has come up, it's former Fed Governor Kevin Warsh as potentially being the successor to Powell. And so let's see if that's something that happens over the next few months. I doubt before the next Fed announcement here on the 18th, but maybe before the July meeting, that's possible if Trump doesn't get what he wants in terms of a rate cut. But if a successor is named, what type of impact does that have on the market? And will that person speaking, let's say that it is, will it have an impact on stocks? Will it have an impact on the bond market? Will it have an impact on the economy? We don't know that, but that's an interesting concept and something to pay attention to. So there you have it, an update to prepare you for June 18th, the big day. There's going to be one more video left in this series to just get us ready for this. And what I'm going to do in that video is we're going to spend some time looking at the last two rate decisions, the last two dot plot releases, to see how the market moved from that, just to give us a feel for what potentially can happen. And then I'll also update you with any news that will come out closer to the meeting, either Monday or Tuesday of next week, to just make sure that you're prepared for what is going to be a volatile day in the markets. So what are your thoughts with the new CPI and PPI data that came out this week? Do you think that there is a chance, a surprise chance, that there is a rate cut at the 18th meeting? Do you think maybe it'll happen in July, or do you think that it's September like the market makers think? Let me know in the comments below. Make it a great day, everyone. Take care.